Good evening, everybody. May 14th, 2020, 8:54 p.m. I'm just going to walk you through on video. I had a few questions on email after I sent out part one of this article. So the article is simple crude oil intraday trading strategy, trading bullish trendline resistance breakout, crude oil trading strategies. So that's the breakout right there of the structure, and the trend line's up top. Just so you know, you can find these articles on Epic Crude Oil Algorithms Twitter feed. And here's an example. And there's a list of them. So Crude Oil Trading Strategies free study library. And you just click on there and that'll take you to the list. I'll show you really quick. So I've been posting any of the unlocked articles to our Crude Oil Trading Academy, Learn to Trade Crude Oil, basically a landing page with all the articles linked. So you can see how often that I'm posting articles. There's videos too, and there's probably, I don't know how many are on here now, probably a couple hundred, but basically it's my, well, maybe 100. It's my, my trading journey in crude oil. I'm also starting one for swing trading and for day trading equities. I've been writing a lot more articles on that. But as I say, if you can learn how to trade crude oil, you can trade anything. And I know that because I'm 32 years in and I've traded everything, literally. It's just that crude oil, it's much more complicated. And we know that because we're developing software, and it has over 9,000 rules in its rule set, which exceeds the 200 equities that we have modeled and we're coding for machine trading, for swing trade equities. So just the oil algorithm itself exceeds the code instructions for the 200 equities, to give you an idea. So it can get complicated. So what I'm trying to do is simplify it down. So beginner traders, intermediate and advanced alike can take advantage of these simple setups to buffer their P&Ls. So when they do make errors, it doesn't hurt as much, right? So a real quick explanation. So this is the premium feed of our alerts. And we were trading in here in this structure last night and the day before. Sorry, I've got a cough. Anyway, we were trading here, so I was charting it all. And this is an algorithmic structure. You don't have to worry about all that. But the point is, it broke out above the trend line. And this is an example of, the guidance and alerts. So we're in what we call the second leg of this move. And so this is me telling traders, look, we're breaking up above this trend line resistance, and it looks like we're going into the time cycle. There's a time cycle here. I won't get into the details because this is our premium feed, but we're definitely getting into the time cycle completion now. So this was the alert saying, look, I wouldn't be shorting because this was setting up. And then if you go to the actual article itself, so trading the trend line breakout for an intraday run up of 200 points happened today in oil markets. Below is a step-by-step guide of how to trade this strategy in crude oil. So I didn't take the trade. I was busy. We do get oddly busy in what we do between coding and trading and publishing and alerting and everything else that we do. It's a small team of 4 people. So I do miss the odd one, and I missed this one today, but I had alerted it. We were ready for it. I just didn't execute. So below is a screen capture of the oil trading alerts feed. That's what I just showed you. And then below are tips and steps for you to follow. So part 1 provides the conventional charting and how to trade, the basics of the strategy. And part 2 that I'm writing right now for our premium members includes all the different levels that you would see. For example, I mean, I find it funny when people say, there's so many lines. Yeah, well, guess what? We're pretty successful. Um, and all those lines can be brought down to no lines in a flash, right? So I can take the algorithmic setups that provide laser entries and ebb and flow in a trade, and probabilities and price targets and time cycles and all the other things that we know about. I can take that and I can simplify it down to a chart like this in a nanosecond. The difference is a trader that only has this can't do this. There's a big, big difference. See, we know, here's an example. We know where resistance is right now. So here, I'll show you. Here's my live chart. So you see this, that's a trajectory line on a time cycle. Look at how it hit, 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 hit. We knew that resistance was there. Whereas if you're only trading this, you have no idea. And sure, you can set your fibs, and every indicator or every, technical helps. But I'm just making the point when people start, it's your style and it's your bank account and it's your, your journey. Our journey is, in depth, but this is a condensed, simplified version. And it's good even for the most experienced to come back here and go, okay, let's make this real simple here. And this is what happened. So this basically explains there's 3 scenarios. When price breaks up, it's either going to keep going, that's one scenario, without coming back. And of course, the other scenario is price comes back and retests what was previously resistance. And the third scenario is that it fails. So here's an example where it just creeped up a little bit and then it failed on this one. So those are 2 false breakouts, especially this one. You can see the wick on the candle. And this is where we started trading it. So we got stuck, and then we traded this structure for a big win, and then we didn't take the actual breakout after. But we traded this whole down. We went deep, and even the software Epic V3 was deep, 24/30th size, so really big, and we got this full run up. It was a fantastic trade, but it would have been better to also get this. This is a much better trade than the one that we got. So we traded the highly technical part and we missed the simple part just because we were busy. So anyway, those are the 3 different ways. So steps to trade an intraday trendline breakout. First of all, charting. So I've got, massive doodles all day long. Here, I'll show you. Where's my doodle? Here's my doodle chart. These are all trend lines, right? Now there's a fib fan in here and all kinds of other stuff, but I want to know what's going on and I want to be able to identify, the simple setup, right? So oil traders should always be working their trend lines, really important on whatever time frame you're trading. 3 possible trade scenarios when price breaks out. So that's the breakout fails. So you gotta be prepared to use your stops, or you gotta know what you're doing, like we did, and we traded it all the way through the failure, and that's how we got that big win. But we could have lost that trade, right? Better to use stops, especially if you're just starting. The breakout succeeds and price keeps running, so you got to be prepared to just run with the bulls. Now, oil typically comes back and retests its supports, but if you were running a trade, bullish trade, a trend line breakout with equities, especially in equities, you got to be ready to just go. It depends on the actual equity itself, but usually commodities, they'll come back and retest support. And that's what happened in this scenario today. And then the third scenario is that price breaks out of resistance and it comes back and retests its support. So it'll either just keep running, it'll retest support, or it'll actually fail. Trade the price action. In this example, crude oil price intraday broke out of the trend line resistance and then retested the level and then continued for a bullish 200-point run. And that pays bills for months if you hit that. Crude oil futures pay big dividends, right? When you hit the trade like that, right? Anyway, so that's your golden opportunity. So that's what the simple strategy and crude oil intraday trading looks like for the trend line breakout. Comes down to always be charting your intraday price action, so the trend lines. learning how these setups work. So there's different setups that you should learn, and then simply managing your trade execution with trade size management, technical level, stops, and sound thinking. The last side note, I will say, ideally you want to get this trade at the support of the actual structure of the setup. So what I'm speaking to there is the actual support of the structure would have been down right here where that green arrow is. Now I alerted to the oil trading feed that was the likely place for your entry, and run, so then you would have got an extra 200 points, right? I think it was 200 points or so, 25 to 26, 25. So, or actually 26, yeah, 26, 25. So an extra 125 points on top of the 200. So that's a 325 point run. We had that all dialed in. Here, I'll show you. Where is that? We even knew the time cycle. So I was saying in just under 10 minutes, get ready, and then boom, it hit, and it moved fast. There was 50 ticks of that moved really, really fast. But we were trading all of this. Here, I'll bring you back to an earlier time frame here. Well, this is where we were trading that whole structure. But see that green arrow? See where trade is? It's not there yet. So that's the support I was referring to. So yeah, things like this trend line here, that's an algorithmic trend line. Conventional trading or charting would never have that trend line. They would never know what I knew there. And that comes from algorithmic modeling. But anyway, that's just shows you the actual oil trade alert, getting our traders ready. So ideally you want to get the trade started at the support of the structure of the setup, not the breakout, as shown in the epic tweet below. So that's here, right there. So this was after EIA, right? It's developed through Wednesday night, and then Thursday, today. So it's always that after EIA report that things get really interesting. And then, of course, our subscriptions and that kind of stuff for oil trade alerts, or the oil trading room, and the newsletters. So that's how it's done. Just remember the three different scenarios. Keep your head screwed on straight so you don't get into trouble. If you do get into trouble, well, then you just want to know how to trade that you're in trouble. And that's what we did for that big win inside of the structure. And then hit the bottom of that structure. Hopefully you get the full run. And then that'll pad your account, because it started here, right? Then that pads your account so that when you get the bad trades, because they happen, right? Especially in oil. So peace and best. Hope that helps. Take care.